All right, guys, welcome back to the Independent Investor Channel. My name is Ryan. These are very fun videos. In this video, I'm going to walk you through some portfolio statistics. Now, I'm going to cover about $250,000 worth of assets, so not a total review of the entire portfolio, but these are the larger accounts. I've been hit through the channel with some folks that are interested in my year-over-year performance. I'm going to declare that. I'm also going to provide you guys my dividend income from the previous year, and I'm also going to provide you the forecasted dividend income going forward. I'm also going to provide you guys some insight on my top 10 holdings. It will be of interest to you guys that 53% of my equities holdings are maintained in the top 10 holdings. I'm going to declare those for you guys as I actually drop you into the reports function that I have through Merrill, my broker that's attached to Bank of America. This is the best way to throw out information, just an attempt to try to provide value through the channel in just another way. And if you guys are creative with this, I'm going to show you each and every one of my portfolio holdings that I have to date, so you guys can benefit from that. You can benefit from understanding the total number of holdings that I have. Again, if you're creative, you'll start your own watch list out of Ryan's portfolio if that's what you want to do. I have no problem with that. It's free of charge. This is what I have. This is real. And so without further ado, guys, I'm going to kind of walk you through these cards. And these are snapshots from my account, and I'll just kind of walk you through them and spend a few minutes on each card as we go through the information that's declared to you. All right, guys, so please enjoy. So the first card here, as promised, is my top 10 holdings. So this has a ton of information jam-packed into it. You can see there with the very first, right under the ML Direct, which is the money market, that's the cash holding right now, is the Vanguard S&P 500 index. So I am very, very satisfied. We've got about 10% of this in our portfolio, which makes up about 9.51 to be exact of the total portfolio value at 101 shares. Just a little over 26,000 in market value there. And as we work down right below it, the Vanguard's dividend yield, VYM, as well as noted there at just over 240 shares there, and at about 6.69% of the total portfolio. So you can see there in the top two holdings, leading it off with passive ETFs. Now, this is awesome because it's split between the two accounts. One is in my account and one is in my spouse's account. And I went for the dividend yield in my account since I already have exposure to this in my 401k or TSP. For you guys that follow my channel, know that I've got the TSP. And then right below that is actually a new holding that I have in Realty Income Core, and I've actually put this in the portfolio to run a couple strategic benefits for me. REITs are one of my favorite sectors to invest in, first and foremost, but really I would like this to give me dividend income per month as the bonus, to be honest with you. But I've done away with my fixed income portfolio for the time being, and I was looking to supplement some of that higher than average dividend yield income by just owning the equity. And so Old Realty Income Corp really helped with that. And hopefully that's going to fit the bill for the strategic goal in this portfolio. 2.83% of the total overall value at 150 shares. I will continue to add to this position. I really think it's probably bottoming out here between 40 and 60 has been its recent trading range. So I'm just super stoked to own this. You know, the only downfall behind owning this company in the taxable account, of course, is that they are non-qualified dividends, which is unfortunate. The optimal way to own any REIT is to maintain that within a Roth IRA or a retirement account. So your dividends, even though they're non-qualified, won't be taxed within the Roth. Right below that, we've got the big two in the tech sector. Not a big surprise here with Microsoft and Apple. leading it off. Great technology exposure, 40 shares in Microsoft and 21 shares. If I was going to add to any of these positions, it would be Microsoft, hands down. I really don't think I'm that excited about adding to Apple right now. I'm allowing this to be maintained on a drip. All of these positions, to be honest with you, are being maintained on the drip, and the dividend income that I've received over the last year, I will declare in this video, so that'll be interesting for you guys to note. But 2.5% and 2.25% in those as the total overall amount in comparison to the portfolio. And then Duke Energy, that was also a newer addition. This fit perfectly in my taxable brokerage account. I would almost rather own a regulated utility as opposed to fixed income at my age. I will look to introduce some fixed income, but right now I'm not really that satisfied with the prospects of those investments. I would rather go with equities at this point. Even though they may be a little more volatile than bonds, the yield is so much higher. And if you're really selective with the utilities that you're buying, you can really get some higher than average dividend yield. So you can see Duke Energy and Southern Company both on this list. And then sandwiched in between the two is Johnson & Johnson, which is just an absolute fave of mine, just under 2.25% of the total overall value at 41 shares of J&J. And then Disney, which has been beat up. I would buy more of it, but I'm actually capped out on my telecom sector, which is Disney now. It used to be discretionary, but I'm fine with just allowing Disney to work and just continue to be an investor at less than 2% of the total overall value. And then finally, my newest position, this is one of the very few positions that I have doubled up in, which is Raytheon Technology, ticker symbol RTX, at over 80 shares here, 1.79% of the total overall portfolio. So just as a quick shot, I'm going to throw this at you guys and just walk you through my total overall holdings. Now this is a little bit different than what I usually do on my portfolio reviews. This is about as thorough as I can get right here. I obviously had to block this off to protect my privacy. But what I can declare to you here is everything that I can declare to you. And just as an example, starting with AbbVie on the top, it gives you your price, your market value, and then more importantly, the percentage of the total overall value in reference to the portfolio. Now, you know, over diversification is a real thing, and there's probably some debate whether or not I'm over diversified. I would argue against that. Certainly, I do try to maintain a 50-50 mix between a passive ETF program split between the three accounts now. Obviously, the taxable brokerage account that I've reviewed for you guys is a little bit more centered around dividend growth, as I currently don't hold any ETFs in there. That will change over time, where I look to consolidate my taxable brokerage accounts and bring those home eventually. The taxable brokerage account with Merrill will end up being the largest account that I have in my net worth. But until we get to that time, we're just going to continue to feed the beast. We're going to continue to build the taxable brokerage account with some dividend gems, and that's going to be good enough going forward. So that's how you read this chart. So what I did is I scatter plotted this. So if you guys want to pause the video, what I would recommend is that you hit pause on this right now. And I do apologize for you folks watching it on a smartphone. You may have to zoom in a little bit. I didn't edit this to zoom in on these holdings. However, it is declared to you nonetheless, and this is right out of my portfolio. And I thought this screenshot delivered the goods better than anything. So this is just continuing on with the holdings. It really doesn't get any better than this. You can see the top end of this is equities holdings, and then the bottom are the equity ETF holdings from Vanguard. Obviously, I'm a fan of Vanguard with VEA, VWO, VYM, VYMI, VNQ, VBK, VBR, VTI, VPU, VOO. Do not ask me to do that twice. You can kind of see for yourself what we're working with there on the holdings. So I'll let this sit for just a few more minutes or a few more seconds, and that way if you guys want to pause this, you can scroll to the right and check the percentage of the portfolio to kind of get an idea, man. I'm not a big proponent of over-levering to single stock. I've been burned in my past with regard to owning too much exposure in a single stock, and it seems like any time I try to stick my my nose out there and try to get some exposure or more than an average exposure than what I'm comfortable with, it usually ends up burning me. So I like this percentage to be relatively lower. I usually try to maintain a 3% and below rule. Even you can tell some of my top 10 holdings are less than 2%. So if it gives you some idea of how much I value diversification, it should really come through in a video like this for sure. And this is the final card, finalizing the equities holdings within both the taxable account, the Roth IRA account number 1, and the Roth IRA account number 2. Now, a lot of subscribers to the message will be like, Ryan, why are you declaring this stuff to us? I really want you guys to understand both of these accounts will be back up above. I've had them above 100,000 each in the retirement accounts alone. The taxable brokerage right now is about 85,000. So I anticipate all three of these being up to $100,000 shortly once the market recovers. It's not a question of if, it's a question of when. There's no doubt about it, because I know it'll happen. But I want you guys to understand that the two accounts, the retirement accounts that I've had for quite some time, I started those accounts with $1,500 each. So I always want people to really keep this thing in context. I've been building these accounts for about 15 years, ever since I've been in the military, and a little bit before that. But these haven't been established my whole life. The prospects are scary if I would have started this account with the discipline that I have now when I was 19. And I try not to think about that too often and just go with what I have. But for new investors, certainly, that have time on their side, they should absolutely be chomping at the bit when I put these videos out. And you can consume content with the perspective to understand what is important, what is possible in the investing arena. And I can tell you what, if I can do it, anybody can do it. And I just want to show a couple cards here. I want to go ahead and show what the portfolio performance has been. You can see there we're up nicely since May 1st of 2019. Portfolio's up just over 33,000, 14.5. That's fine. This is a byproduct of a program that I put in place. I typically don't really find a whole lot of value in focusing in on these dollars, but if it gives me some level of credibility with regard to my investing strategy, then so be it. If you find that that's important enough, I wouldn't do YouTube if I didn't value my discipline with regard to my investing strategy, how I deploy it, and how I make it make sense for me. But you can see there, obviously just over 260 in assets, so $250,000 in assets reviewed during this video. So not a total portfolio review, but a good chunk of it anyway. And then you've earned 53, 46, 57 in dividend income for the previous year. So for the last year, we've got over 5,300 in dividends paid. And I think as a dividend growth investor, I think that is insanely amazing. Now remember, if my total portfolio were devoted to all single stock, right, I could put a lot more emphasis on maybe increasing the dividend. The yield on this portfolio is it's a respectable 2.9%, right? So I get 1 basis point higher than what the S&P will yield. That's totally fine. I'm comfortable with that. But 3%, 2.9 to be exact on portfolio yield on that, but the portfolio is performing as I would expect it to perform. This is a combination of appreciation, depreciation. This includes the last drop. This includes any trading, swing trading profit. You guys know I've been very successful at that. So you can tell that that's obviously buffered some of the trading loss or some of the unrealized loss in the portfolio, and it's helped kind of buffer this storm that we've went through recently. All right, and the final card I'll show you guys is the anticipated yield going forward. This will be awesome, guys. And just to put this in perspective, the portfolio that I just declared to you guys, the 260, will yield just over 7,300 for the following year. Okay, so for this next year coming up, when I do this review in May of 2021, I will have expected to earn $73.39.62 in dividend income. Okay, so that's an improvement over last year. Obviously, we're doing fine there. The portfolio yield at 2.9. Remember, close to 50% of the portfolio is ETFs, guys, right? With a less than average dividend yield. That is not why I invest in those ETFs. The goal with ETFs in the portfolio is different than just searching for yield. That's not why I'm doing it. I'm doing it to seek out diversification, grab the entire broad market, grab that diversified exposure, and allow myself a little bit of yield on that as well, but also to seek out some international exposure, emerging markets. So I'm grabbing big pieces of the market all at once by getting that exposure, guys. So hope you guys appreciate the transparency. This will equate to about $611 per month, which I do have set up on a dividend reinvestment program. This is basically where I take the dollars that are rendered from my dividend holdings and roll them back into the underlying security. What I just said was a mouthful, but basically any monies that's paid to me via dividends go back into buying more stock for my portfolio. So guys, I hope you enjoyed this review of the portfolio statistics. These are really, really fun for me to do. Again, the takeaway for you guys is to understand what is possible in the investing arena. Good on me for coming on to YouTube and showing an example of what a portfolio can look like after a few years of working at it. I wouldn't say that this has been a work in progress over my entire life. Again, I kind of alluded to the prospects of how scary that would have been if I would have started at 18, 19 years old. I did start investing then, but I did it all the wrong way. And so hopefully this is able to declare to you guys what's possible in investing, and hopefully it motivates you guys to maybe get started if you aren't started yet, or to start to set and meet those financial goals in your portfolio going forward. So guys, as always, you want to hit the subscribe button for me. Help me support the channel. Leave your comments at the bottom of the video if you appreciate videos with this type of style and layout. I'd love to hear the feedback, certainly. Share the message with new investors and existing investors alike. Bring them onto the channel. Help us grow this community that we're growing and bringing awareness to the investing arena and the stock market and being a self-directed investor. Guys, thank you so much for tuning into the video, and good luck in your investment future.